Hello, everyone. Happy Christmas time. As you can see, we're all feeling a little bit merry here today. We are a serious team, but we do also like to have some fun. We've got Olivia, Maxim, Matt, and Jacob, and myself here today to do a little bit of a Lombard 2025 wrapped and also share some of our roadmap for next year, as well as some predictions into next year as well. It's obviously been a super busy and exciting year for everyone in crypto. I would say that we've had a really awesome year over at Lombard, like launching new products, making big strides against our roadmap and our grander mission. And yeah, just really pleased to be here to share all of that with you guys today. The stream today sort of flows in has like a bit of a schedule. But we're going to keep it kind of loose, but it has a bit of a schedule. And that schedule is to look back on the industry this year, taking a big picture view as to what actually happened in 2025. And then we'll go and have a little look at what Lombard did in 2025 across the timeline, and we'll pull out some of our best bits there. And I really want you to hear from the team about why it mattered to them, and also just a little bit of information from behind the scenes there, before we then go and look forward to 2026 as an industry. I actually based much of our 2026 predictions on Jacob's hot takes. So the team is going to be here to challenge them, I'm sure. And then we'll share some alpha as to what's coming from Lombard in 2026 as well. So I just want to do around the room of who's here. I don't know if people have met Olivia before on a live stream, so maybe you want to introduce yourself, Olivia.
Hi, I'm Olivia. I am a lead on the engineering team, and I work mostly on the back end and protocol.
Welcome. Should we work down? Maxim, do you want to introduce yourself?
Hey, Maxim here, DeFi lead at Lombard, working day and night to make sure that Bitcoin is super productive in DeFi.
Hi everyone, Matt, head of product here. Great for you to listen in. This is going to be a great call.
And Matt Donovan here, go by Dono, Mr. Marshall, stole my thunder there. Lead BD at Lombard, working everything from how do we bring LBTC and now BTC.B cross-chain, as well as rolling up the sleeves a ton on the institutional side. So good to see everyone, and happy holidays.
You're on mute, Jacob.
Jacob, you're on mute.
Shoot, I clicked off mute. I was saying, hey, Jacob, one of the co-founders. Unfortunately, I don't have a cool nickname like Dono, but maybe I'll try to, at least by next year this time, come up with something new. I'll trial some stuff throughout the year.
And hopefully you have a Christmas jumper by next year as well, because the guys are putting you to shame here.
That's true.
Maybe in our merch package next year, there's some Lombard Christmas jumpers.
I appreciate that you think that would be on brand for me, Charlotte. That actually means a lot.
You're full of surprises, Jacob. All right, well, here's everyone. And so let's get into it. We'll probably run for about an hour today. So in this first part of Wrapped, we want to take a big picture view as to what actually happened in 2025. Much of the stuff on here is from Jacob's mind, but what I'm most interested in is hearing from the team about what they think regarding the BTC price volatility this year. Price is obviously what everybody talks about, but just wondering, price is down, but are fundamentals up? I seem to think so, but interested to hear the team's thoughts on that, maybe from Dono or Matt Marshall.
Yeah, I think people tend to always focus on price. That is reality. However, I think the main point is when, and I think this has been proven throughout 2025 for sure, when Bitcoin exposure becomes one of your highest revenue generating products, it tells every CIO, every regulator and allocator that this asset is kind of crossed more into, call it, core financial infrastructure. Price action, again, has been a bit disappointing, but at the same time, it's pretty important to zoom out. I mean, Charlotte, I think you even highlighted and shared a bit about for instance, the BlackRock Bitcoin ETF being one of, if not the most profitable revenue sources for BlackRock in 2025. And so I think the numbers there was generating just under around $250 million in annual fees. And so that's been the most explosive product that they've launched in their history from an AUM standpoint. And this is the biggest asset manager in the world, right? And so the real unlock here is ultimately when you start making money from launching products and people around you start making money. And on top of that, I also think it's a perfect sort of test case and product to have in the market for regulators to get fully comfortable with how these things work. And then all of the institutional plumbing, call it, is supported around this infrastructure all of a sudden. I think we kind of started to see that happen at the end of 2024, but that's now a reality. And I think part of the frustration on the crypto native side, thinking back the last, 5, 6, however many years, is I always found myself having to talk about, heading into any traditional financial institution and, talking about the blockchain trilemma. And you're just starting from like ground zero, and it's the most boring conversation. Now, all of a sudden, like all the major banks are providing direct custody support. They're providing access to different trading and settlement services. They're launching their own tokenization engine. So the entire market landscape, I think, is completely shifted. Maybe you can point to the stablecoin growth as being a part of that. But I think if you're to zoom out a bit and really understand what happened in 2025, there's way more regulatory clarity than ever. All of the major institutions have fully provided support from a plumbing standpoint. And in that way, I think volumes will never be higher heading into 2026. And, I think this will be a bit of a blip on the radar as far as how we ended the year, and price action not being the most exciting thing, but you got to look around and understand what the infrastructure is fully in place to support all these different types of use cases, which maybe 2 or 3 years ago just didn't seem to be possible. So not fun on the price action side, but again, I think the infrastructure is now there to actually launch pretty compelling products and puts Lombard in a pretty good position for all that.
Yeah, all I'd add to that is I think what a great year for Bitcoin, right? So short-term price action aside, I think Bitcoin's found a good base and the adoption is amazing. We're seeing regulatory clarity in pretty much all corners of the world. I think it's an amazing time to be building in a space of globalization of Bitcoin compared to obviously more kind of defensive geopolitics. So as more Bitcoin comes on chain into the open economy of DeFi, Lombard is perfectly positioned to make that transition happen. And if we look back before 2025, where we weren't seeing too much Bitcoin being utilized within open economies, now we are. And I think it's very early days to realize the whole potential of where we see Bitcoin as an asset, the value that it adds to everyone, individual investors, store of value for personal wealth preservation, all the way up the value chain. And just observing the market, I think those are the paradigm shifts that we're going to see playing out more so over the next year or two. And beyond the 10-10 price blip and some contained liquidations in that space, I think we've seen actually a lot of stability over the year.
I'd agree. And just want to double click on what you said about wealth preservation, because it is a point on here that we've made in that the debasement trade sort of went from fringe to consensus. Now, this is something that you've written about previously in your FX Street column, Jacob. So just interested for you to share a little bit more about how you think the debasement trade has become more mainstream, or at least consensus.
Yeah, I feel like this was one of the most mind-blowing parts about 2025 for me, is that we've been talking about this idea of the debasement trade, Bitcoin being a great answer to that since Bitcoin was, since Bitcoin's inception. Certainly since I got into the space, it's always been a big topic. But now we're starting to see institutional adoption of that narrative at a very early scale, but an undeniable scale. This was via reports from, I think, JP Morgan and Morgan Stanley were the first two investment banks to come out with research basically saying that institutions were, heavily piling into this trade, Bitcoin and gold being being sort of the answers to people trying to free from dollar denominated assets. And then I think many other pieces of commentary followed suit. I think Larry Fink was on some sort of global stage saying something similar. So I mean, everybody has come to sort of internalize this idea that Bitcoin is a proper hedge to dollar denominated assets. 2025 also a massive year for gold. Which, funny enough, for the longest time, Bitcoin has been this like alternative to gold, and I think people have tried to push gold down. But I think everybody's kind of realized that the gold and silver having a really big year is perhaps one of the, if not the most bullish thing for decentralized money, because this is supposed to be a better version of this. If you think of like I don't know, maybe Bitcoin is like high gold beta that ultimately may replace the asset as the sort of global store of value of which all global wealth flows into, then this was a really good thing. And, we started to see the, very early signs of like the debasement trade isn't something that just happened in 2025 or whatever. This is going to be a multi-year trend, almost certainly, probably over the course of the next 2 decades, you're going to see this trade play out. So sort of wild to see it all happen in 2025. And I think, Mr. Donovan and Mr. Marshall touched on it quite nicely. But to me, the biggest trend of 2025 was that maybe for the first time ever, I mean, prices were up and then they were down and then they were up and then they were down. I mean, it's for anyone who's been in crypto, this year of volatility wasn't even volatility. This is just, classic market cycles, I suppose. But certainly it felt like things were up and down. But maybe for the first time ever, it feels as though fundamentals of crypto have well started to outpace price. This certainly felt on the institutional side where, institutions, despite prices being down and like the sentiment in the, kind of inner crypto circles feels like everything is dead. Institutions aren't even paying attention to this. I mean, thankfully, I don't even think the Lombard team pays attention to this much, but like a sentiment among the deepest builders hasn't changed all that much. Maybe unlike last cycles, there is so much promise going on behind the scenes where, we're not doing proof of concepts. We're not kind of testing things out. It is like, regardless of where prices are in the next, 6 to 12 months, you are going to see billion-dollar, if not potentially even trillion-dollar deals, done in the crypto space where new assets are moving on chain, new products are spun up by some of the biggest institutions and fintechs out there. It's a pretty wild time to be building in crypto, and I think this sentiment is shared, quite a bit among some of the serious builders in the space. Maybe my favorite part of 2025 is that a lot of the fluff and scruff has finally been, phased out. It's sort of funny to see, when prices are high in 2025, you see the launch of a ton of different coins. And I mean, I think about who we've been competing with in the Bitcoin DeFi space. I mean, 90% of the field is gone now. They, I don't know, launched tokens, maybe team made a little bit of money, and now they're done. And they sort of missed the forest for the trees in a lot of ways. Now is the best time maybe ever to be building in crypto, and those who are sitting here in the next in the past 3 months, and those who are building for the next 6 to 12 months are going to be rewarded handsomely.
Thanks, Jacob. Hot takes already. We're not even at the hot takes section. But speaking about Bitcoin on chain, bring it back from macro into the world that we exist in. Maxim, just really interested to get your take on how BTC-Fi, or at least on-chain Bitcoin in DeFi, has been working this year. Be interested if you could share your view on that sector, its activity, and how you think it's performed as a sector.
Yeah, Bitcoin in DeFi is an interesting, quite a volatile story this year. So the year started with a ton of speculation. Obviously, there were a lot of fresh new protocols that were about to launch their tokens, or a lot of teams who were willing to make a reasonable bet on BTC-Fi and introduced some incentives, and a good amount of budget was spent in either like pre-launch tokens or actually launched tokens in the first quarter, which was honestly a continuation of the second half of the previous year. So the beginning of the year was incredibly lazy and easy in this sense because yes, the speculation was around, incentives were thrown everywhere, and effectively, well, Babylon did an amazing job of basically accumulating this interest and massive demand around the staking and their protocol. So what this resulted into was massive loop-in trade going on. A lot of LST protocols, including the LBTC, Lombard's LST for Bitcoin, were effectively competing for borrowing as much as possible of Bitcoin in the free market. Bitcoin borrowing to date is still extremely cheap. The reason is very structural. There is barely any demand for borrowing BTC. And this is true both in DeFi and CeFi, and honestly, barely anyone wants to go short on Bitcoin. So the only reasonable trade that came up in the early this year was, okay, how about we basically short a yieldless Bitcoin versus a yield bearing asset and just generate some spread there, which was pretty meaningful. And yeah, it was a good trade for sure. This was something that served as a great inspiration and catalyst for big lending platforms to integrate yield-bearing Bitcoin assets. So we saw Aave integration, we saw Spark integration, we saw a lot of interest in Morpho, and eventually every single lending market picked up the yield-bearing Bitcoin narrative. So that was great. Quite a short living though. So obviously when at some point a lot of incentives budgets were depleted, the token launches passed, and eventually we ended up in a situation where the spread has basically shrinked a lot, and effectively it's not as amazingly profitable anymore to run the loop-in trade. And this is where people ended up looking for, okay, is it actually possible to generate any yield with Bitcoin and DeFi in a meaningful way? And it's been pretty interesting to observe what the solutions have been. So as I mentioned before, a lot of speculation led to lending markets adopting yield-bearing Bitcoin standard and other Bitcoin wrappers as well, which opened a lot of liquidity, available capacity to be borrowed, and primarily in stablecoin form. So this has become a new trade, effectively looking for the cheapest sources of stablecoin liquidity against your BTC to be able to eventually arbitrage either the spread between different lending markets, whether it's the spread between Aave and Morpho, for example, the spread between incentives, and the spread between different source of stablecoin assets. So there are obviously a lot of new stablecoin assets launching this year. This helps a lot. The different assets like PYUSD, the Ripple stablecoin, the global network, the USD, all those assets, they introduce a lot of incentive to the ecosystem. This helps a lot for the trade to also pick up. And what we also observe right now is that the risk premium finally becomes tangible. So incentives is not the only source of the premium, and people actually do prefer USDC, for example, as an established player to some other stable coins, where this materializes into a spread between the cost that you could borrow USDC for, then eventually sell it and redeploy it into a token, which is a newer but not necessarily worse in terms of a risk profile, and then eventually you can generate some good spread there. So probably today the space is offering around 2.5 to 3.5% spread, including the incentives budgets that different teams are spending. So it's interesting to see. It definitely did not exist in the beginning of the year because, again, all those different stable Bitcoin assets, they didn't have access to the lending markets. So it's a good progress, and paired with the staking yield, paired with some potentially other new sources of underlying yield that is coming in 2026, this could potentially form like a very healthy baseline of average 3% annualized return on your BTC, and then provides room for experimentation and trying to exceed those levels.
So much alpha. Thanks, Maxim. That's a really good recap of what happens on-chain in Bitcoin this year. Interesting to see how it's ebbed and flowed, and the players that have moved in and out of the market, as well as some new opportunities that have revealed themselves along the way. So thank you for sharing that. Let's move to the next. Oh, sorry.
I was just going to say, maybe just a high-level recap. That I think the main point is that at the end of the day, like, everything always comes back to center. And from a market standpoint, you always have to take a close look, to Maxim's point, on, you know, where are the different incentive structures and how long can they last. And so I think ultimately the key to have anything be scalable, sustainable, once those incentives dry out, is from at least a Lombard and a protocol perspective, you're doing a great job at, you know, working with different forms of distribution partners. And that can mean a lot of things, but I think as the market starts to look at, you know, the past year of Bitcoin on chain and how that's been activated in DeFi, and what 2026 should look like, you really have to hone in on who's actually working with many different types of distribution partners. So when those incentives dry out or trades completely switch or flip, you know, the actual asset issuers are still in a good position to continue to grow their products. So I think Maxim did a great job giving the full overview, but I do really think the main point is things always come back to center, and you really have to understand who's really being thoughtful about distribution when those incentives dry out.
That's a really good way to wrap that, because it sort of segues very nicely into what we've been doing this year, and all with that laser focus of bringing more Bitcoin on chain. Whilst yes, we have a lovely incentive structure with our Lux program, there are some fundamental building blocks, I think, that we've put in place this year that move us very much from a single product protocol in LBTC very much into a platform. And I think it was in May or June that we shared our vision to build Bitcoin capital markets on chain. Previous to that, and since then, we very much have been putting that to the test, or proving that statement with the BTC.B acquisition recently, with launching our SDK, allowing anyone, any chain or protocol, fintech even, to build with our BTC assets and incorporate BTC very cleanly into their protocols. And we've also partnered extensively with the key players within this industry from a DeFi perspective, from a staking provider or security perspective as well. And you can see many, I've actually not put the names on here, but maybe we can speak to them. But I think our consortium is 15 members now, made up of the biggest digital asset institutions. Our staking partners who support our staking into Babylon include Galaxy, Figment, Kiln, so just incredible partners there. And then more recently, we've announced exclusive partnerships to be, for LBTC and BTC.B to be either the exclusive or the canonical BTC assets on very large chains as they launch and they go to market, including Mega ETH, in the new year and stable more recently. So I'd just like to, share this throw this back to the team and have them double click on a couple of the items in here. It is actually in chronological order without the dates on it, but we can maybe start with the Security Consortium, which we revealed in February. And I'd like to give the mic to Olivia, just to share a little bit about why the Security Consortium is important, how maybe it differentiates LBTC and now BTC.B as an asset comparative to others in the market, and why we're so proud of it.
Yeah. So when we announced the Security Consortium, it wasn't just a feature. It was something that we had been building towards from day one, and scaling up to the 15 incredible partners that we have now. And this is how we have trust minimization in practice. You're not just trusting Lombard, you're trusting these independent institutions, and you're trusting that every mint and redemption has to be validated by them. They don't share infrastructure or governance. As you said, Charlotte, there are regulated custodians, miners, market makers, etc. They all have brands to protect, and compliance obligations, and stellar security teams. Their financial cost of colluding would be enormous. And so we launched our protocol with this incredible team, but we also have so many things in practice for the launch of LBTC, like last year, and for BTCB lately. So our Security Consortium also is backed by other security checks that we have, like independent invariant checks through the Cubist Bascule, continuous rigorous auditing, vigilant incident response, and proof of reserves. All of that together builds the institutional grade Bitcoin infra that we feel comfortable betting on.
I think just to add to that, like perhaps the biggest accomplishment for Lombard has been shifting the narrative on what's acceptable for securing tokenized assets. So the biggest unspoken thing from my perspective is this whole model of decentralized trust. So we talk of Lombard, but Lombard is in reality a label for the Security Consortium, for this network of the largest institutions who are securing Bitcoin on chain. And from the amount of Bitcoin via LBTC that has been brought into DeFi ecosystems, compared to alternatives which are usually issued by a single custodian, that security shift into the middle ground of trust minimization, and being able to use, yes, the early catalysts of points farming and things that Maxim was touching upon earlier, to actually make that security shift, which benefits everyone in the community, I think is something which should not be undervalued. And behind the scenes, there's a lot of security engineering that goes on at Lombard. We've built custom attestation APIs with Chainlink, for example. So all of the security checks and balances that we have behind LBTC are definitely the best on the market.
And asset issuance, right, lives on a spectrum. Highly centralized, think, your CBBTCs, your WBTCs, where 100% of those assets are custodied at either a Coinbase or a BitGo. Obviously, on the flip side of that, you have the more decentralized route, architecturally superior, but I think some of the other products that you've seen on the market, even our almost 2 of 3 multi-sigs, are just very limited as it relates to the actual security checks and balances that these more decentralized players have. So I think when we launched that protocol, we were very thoughtful about who would play that role within the Security Consortium. And obviously, this has been said a few times, but it's literally the biggest crypto native institutions, your DCGs, your Galaxies of the world, public entities, the largest market makers within Wintermute, the largest mining pools with Antpool and F2 Pool, and some of the largest exchanges with Kraken, OKX, et cetera. So it's a really good slate of partners who are not just very strong experts on the security side, but a handful of them even have those fiduciary responsibilities. And so this is, from our opinion, the best way to go about launching this decentralized and more permissionless architecture. And baked into this is obviously, I'll go back to the word of distribution, incredible partners from that distribution side within different verticals. So it's been really, really fun to see this form. And you should definitely expect to see a handful of other crypto native as well as traditional institutions start to join that security consortium set heading into 2026.
Yeah, amazing stuff. And it was incredible as well from a marketing perspective to go out to market with all of those very big names as well at the beginning of the year. I wonder, Maxim, how much of a part the security consortium plays in our listing of LBTC on Aave at the beginning of this year as well. I know that assets go through risk reviews, etc. How much of the security consortium or other aspects of LBTC were part of the very exciting LBTC listing on Aave, I think in January of this year?
Yeah, so what consortium really means, I think in practice for DeFi people on like a very high level is like, what's the ruggability of the protocol, and when you have these strong assumptions around the achieving the majority of the consortium of 15 members, achieving an agreement of them before anything can happen to the protocol. It's like very simple, very very traditional way to look at consensus in DeFi, but its simplicity definitely helps a lot. And again, the quality of the names matters a lot. So effectively, you ask yourself a question of, what's the probability that some of the biggest entities and some of the most reputable entities that actually have legal liabilities on that side, and a lot of risk staked, a lot of financial risk staked behind this. They're not necessarily bringing like an actual real stake to the table, but the social slashing is a thing, and if one of them misbehaves, the business they have behind is under question for them, right? If they misbehave. So it's a very straightforward assessment on that front, and this definitely helped a lot. The due diligence on Aave's side is extreme. It's probably the most extreme out of any lending markets. They have 3 to 4 independent risk managers evaluating everything, and they all need to reach a consensus and agreement before an asset can get listed. I think from the like unlock perspective, what this brings is again access to liquidity, which is super important for Aave. In the early days, it was the play for how can we bring demand for borrowing WBTC, which they had back then. They had around $7 or $8 billion of WBTC sitting mostly idle. It was important strategically for them, and it worked really well. The caps have been raised literally every other week because they were hit constantly. So we did accumulate probably at peak around $500 million of deposits for this trade. So it was very successful, definitely for them from that perspective. Again, as I mentioned earlier, this trade was mostly unwind, but now we still see constantly over $300 million in deposits in Aave, dedicated to entirely new use case, which is borrowing stablecoins. So the strategy did change, but the ultimate access to the platform, the ultimate access to the liquidity is what mattered a lot, and this is why we were incredibly excited about this. And I guess also the last point would be, again, on the due diligence. It's like a stamp of approval from, again, a famously very diligent team. So this definitely helped a lot to progress future conversations down the BD pipeline. It happened early in the year, indeed. So the entire year onwards was also very convenient for us from the DD perspective, because this is a very very handy stamp of approval.
Indeed. Thank you, Maxim. And Matt Marshall, I just want to throw to you because because it leads on nicely, I believe in May or June, LBTC got its yield bearing upgrade, becoming the first yield bearing Bitcoin available on the market. Very, very exciting technical update to LBTC, which previously people had to collect or withdraw the yield of LBTC separately. Now it's all in one. How was that moment for you in bringing the first yield bearing Bitcoin to market? And did that change anything about its risk profile on Aave or anything like that?
For us, it's always been the plan to maximize the user experience of the asset, and looking at the different ways of distributing yield via the token we had kind of presents into two options. One is us baking the yield into the asset, which we do now, or letting users collect it via other means, which introduces a lot of complexity and wasn't what we saw from a demand perspective when talking to a lot of LBTC holders. So that was a big shift in terms of LBTC going from one-to-one with Bitcoin to adding more value over time. And since then, I believe that's led to more opportunities on the DeFi side that Maxim's been talking about with looping strategies and yieldless to yield token strategies, and has allowed us to focus on distribution of that as a crypto asset and acquisition as well. And especially with the number of chains which we support via Lombard protocol, we are probably one of the widest distributed crypto assets across many different chains, EVM and others such as Solana and Sui. This has allowed us to focus on really distribution, security, liquidity for minting and for bridging, and really has led to the success that we've seen, the sticky TVL that LBTC has, and being able to focus on dApp integrations, distribution via the Lombard SDK into leading wallets and leading exchanges. So yeah, that focus has been key, and the user experience simplification gives people what they want, which is Bitcoin returns on their Bitcoin.
I couldn't say it better myself. Thank you, Matt. And I know that we spend a lot of time as a team across the team thinking about LBTC yield, and very, very exciting updates to come in 2026 there. So thank you for sharing that. We're spending maybe a bit too much time on all of these questions, actually. So as we move on, now we'll just have to speed it up a bit. But before we do that, Jacob, I just want to throw it to you. If you'd cast yourself back to August, September time, I think we were all together as a team preparing for the Bard community sale with BiddlePad, which I was very excited about. The UGC campaign, partnering with BiddlePad, we gathered a lot of momentum. I think we were trending in China and Korea, etc. during that time. But what did that period of time look like for you as we brought Bard into the world through the first community sale and then ultimately into the airdrop as well?
Yeah, great question. I have been sort of, I think since about 2020 or 2021, I've been sort of on the sidelines watching Bitcoin DeFi, looking at all of these sort of like potential excitement that was sort of in the air, potential energy rather than kinetic energy, and it maybe right around that time was the first time I really felt like there was, or rather, certainly undeniably felt the kinetic energy in the space. Bitcoin DeFi has been this obvious opportunity, just a matter of someone to take it to fruition. I think in 2024, when Lombard started, we launched with a bang. $0 to $1 billion in 92 days. I think we went as high as 2 billion TVL. We onboarded a total of like maybe 3.5 billion in total Bitcoin to on-chain finance. And for a long time, and I mean, part of the reason that I think we felt like we found such a niche in the space was that there was a massive opportunity. Nobody was taking it seriously. The teams we saw building in the space were not sort of long-term oriented or the type of people to take this opportunity to fruition. And so Lombard stepped in to make that happen. And, we were gearing up for this public sale and token launch at a time when many people were saying Bitcoin DeFi was dead. You go around to these conferences, Bitcoin DeFi that used to be sort of the star of the show was a complete afterthought. The only people who were sort of left in these Bitcoin DeFi circles, at least on, when you went to these events and whatnot, were the Bitcoin DeFi folks. But all along, we felt like Lombard was different. We felt like we had sort of broken beyond just this sort of like narrow niche narrative crowd that had been presented around Bitcoin DeFi. And we were going to, we sort of don't think of ourselves within kind of like narrowly isolated to that category. A lot of BTC DeFi tokens had launched earlier in the year and not, performed all that well. So, leading up to that public sale, a lot of people were like, oh, are you nervous? Are you concerned about what's ahead? And it was the opposite for us. We were sort of playing a game that was totally different and independent from that of the rest of the category that we were competing in. The way we like to think of ourselves is that Lombard is sort of a DeFi, a team of DeFi builders who are focused on Bitcoin rather than the other way around. And I think this has been the uniqueness of the approach that has led us to a ton of success on this front. I mean, that public sale was, almost a moment. Certainly it was a moment of separation for us, from everybody else. I think it was the third most successful public sale of the year. Almost what was it, like almost $100 million in demand or something like that. I mean, it was crazy. I think it opened a lot of eyes. I mean, again, at that point, people were saying like, oh, Bitcoin DeFi is dead. Sure enough, that was not the case, as evidenced by I think the way that we did that public sale and then ultimately launched the token. And so to me, the most important takeaway from all of the way August, September, October went for Lombard was that demand for Bitcoin DeFi is evergreen. Prices will go up, prices will go down. The narrative will become hot. It'll become cold for a little while. But the thesis is sort of confirmed by the market, both in terms of user demand and investor demand. And this is the kind of narrative that is going to survive many, many, many years to come. And this positions Lombard in 2025. I mean, you look at what we built. A lot of this was setting the fundamental foundation. We, began with solidifying the security layer. We then moved to, kind of building out this developer layer in the Lombard SDK, and now have kind of been expanding the foundation of the base by going to Solana and launching a Bitcoin wrapper, have new Bitcoin yield products coming out, have a new sort of security stack that we'll sort of discuss later. We, have sort of been recognized by the industry as like the one of the, if not the best team building in the space that people want to partner with. Mega, Ethan, Stable, both looking at Lombard to build out their whole Bitcoin stack. And so, this is one of those things where, Bitcoin is on a path to becoming a 20, 25, maybe one day a $50 trillion asset. Lombard is going to be building until that happens. And certainly will be building some of the core infrastructure, I think, that all of DeFi is built upon.
Love that. Thanks, Jacob. And that's a really good segue into Lombard's acquisition of BTC.B, which many of these builders already are and will be building with for years to come as they bring Bitcoin to their protocols and chains and applications. Dono, this was something you worked on for at least 6 months, still working on it now. And so I just love for you to share the importance of that acquisition. I believe it was the first live asset acquisition that has ever happened, but the importance of that strategically for Lombard. Over to you.
Yeah, I think we started working on that, Jacob, maybe in February. And it was always in the context of, we were talking to the Avalanche team. they were keen to bring LBTC onto the Avalanche network. And obviously we quickly learned about, what the growth of BTC.B on Avalanche had been to date, and certain constraints or limitations that they had as far as being in the eyes of an asset issuer and just never successful at bringing it cross-chain or maybe helping it grow out of, it hit a cap. And so I think for us at the same time, what was happening is, while LBTC growth and LBTC as an asset and a product was fantastic, we were kind of, hearing from certain LPs or certain distribution partners and potential clients of ours who didn't ultimately want to even have staking exposure, right? They didn't want to deal with the unbonding periods. They were never going to use it as some form of unit of account in whatever Bitcoin yield product or something tied to Bitcoin that they wanted to build. And so we went down a very deep path, 6 to 8 months later, got to a great position to make this announcement. And I think the main point as it relates to Lombard is this enables us to launch incredibly more interesting products beyond just a liquid staking token, right? There's certain use cases where we can work with, perp dexes, for example, to offer some form of native Bitcoin spot trading experience. There's very clean, Bitcoin secured borrowing products that we can launch, and working with a handful of custodians to get this off of the ground. And I know I'm jumping the gun here a little bit, but I don't think the future of 2026 is going to be about, the next sort of Bitcoin L2 or tied around BitVM or OpCat. It's going to be really honed in on programmable custody. And I think, with regard to this asset acquisition of BTC.B, it just puts us in a position to launch incredibly net new types of products and work with a handful of market participants who are trying to solve and crack the code of offering Bitcoin on-chain services to their clients. But at the end of the day, they were never going to build that off of a liquid staking token. So nothing changes, of course, as it relates to, continuing to focus on LBTC and the different products that can even live above this on the vault side. But, BTC.B just completely opens up a new aperture for us to launch net new products and work with folks that we kind of struggled with in the past, whether it was on the LP side or even some of these distribution partners that we've been talking about.
Thank you, Matt. I know the guys here are keeping me very busy in the marketing function, preparing to launch lots of new products and lots of new products, as well as launch our existing assets and products on new venues. So,
hey, Charlotte, maybe just one thing I forgot to mention, and it's kind of the last box here of exclusive BTC partners. One thing that was really, lack of a better word, fun to watch as it evolved over 2025 is, in January, February, call Q1 of this year, all these different L1s, L2s were trying to take a credibly neutral position of what type of Bitcoin on-chain experience they wanted to offer, their customers, their clients and users. That completely switched as it relates to how things shifted in like Q3, Q4 of this year. And the output is where, a handful of chains never wanted to pick a winner as it relates to who's the on-chain Bitcoin partner that they want to work with. And where we landed with the Mega East, the Stables, and a handful of other chains that we'll announce with is they've realized that it makes no sense for them to be credibly neutral or not have a firm opinion on what type of, not just Bitcoin wrapper, but Bitcoin bridging experience they want to offer these different users. And I think that ties into the BTC.B acquisition, because now all of a sudden we have an entire platform and an entire Bitcoin suite as it relates to BTC.B, maybe more unit of account. And through this asset, you can then access different yield generating opportunities. Easily sort of switched into LBTC based on the shared custody infrastructure, all underpinned by the security consortium, and then the entire vault suite of products that we're launching on that front. So I just was looking at that exclusive BTC partner section, and that was a really interesting thing to see evolve, where early days, all these folks were keen to support 5 to 6, 7 different Bitcoin wrappers on their chains, but they really started to understand that they were just fragmenting incentives, and it made no sense for them to not pick a winner. And I think as it relates to the entire stack that we have, it was the perfect sort of partnership to go down a path of.
Yeah, Matt, that's a really great point. And I think that that sort of hints at what's coming in 2026, 2027, where every institution exchange, custodian, fintech is trying to play in the on-chain Bitcoin space, they are not going to be ones who are prioritizing credible neutrality. They're going to be prioritizing the best players.
Awesome. Thank you both for that. That sort of brings us to the end of the Lombard 2025 section. And we are also running out of time, which is convenient because I planned a quick fire hot take round of just about 5 questions regarding our predictions for 2026. Now, what you see on the screen here are some of Jacob's hot takes for 2026. But we don't need to dwell on those too much. What I really want to hear is the team's very short, sharp hot takes and answers to some quickfire questions that I'm going to ask now. So the first one I'm going to throw to both Jacob and Maxim. Keep it short. But the first question is, in 2026, what percentage of BTC will there be in DeFi? I think right now it's about 1.5% of all Bitcoin is on chain and active. What number do you see that moving to, either up or down, by the end of 2026?
Jacob, you want to kick it off?
Yeah, Maxim, I was hoping you were going to kick it off with a number 10, 25%. Yeah.
25.
Go ahead.
Look, it's really hard to measure it properly. Like, my opinion is we have around $15 billion of BTC in DeFi right now. So it's probably around sub 1%. So 1.5% would be like around $25 billion. So we need to grow 10 bill in 2026. I think $10 billion, given where we are at with all the asset managers implementing BTC in their products, with centralized exchanges offering products in style of how Coinbase, for example, is offering a Bitcoin collateral for their users to borrow stable coins and more for today. All these kind of UX features that have been started to be implemented like very recently, maybe in past 4 months maximum. In 2026, they will definitely result in uptick in inflow. So is $10 billion per year a reasonable growth rate? I think, yeah, Coinbase probably got around $1 billion of Bitcoin in just about 2 months of the existence of that product. So 10 billion sounds quite conservative in my opinion. So yeah, it should be possible.
Yeah, maybe just one quick thing I'd touch on that Maxim, I think, hinted at. As demand shifts from sort of within DeFi now to kind of outsiders of DeFi, or rather like centralized exchanges, fintechs, traditional finance coming on chain, everybody kind of off-chain in the off-chain world has always prioritized Bitcoin as number one. So as these folks come on chain, I mean, all of that demand, like centralized exchanges, the bulk, most of their business is Bitcoin. So I mean, a lot of these folks are going to be prioritizing Bitcoin coming on chain. DeFi historically did not like think of Bitcoin as like a predominant asset. All of the net new demand, maybe not all, but the bulk of the on-chain, rather the bulk of the demand that's coming in 2026, which is going to be, I think, a multitude of all of the demand that is, kind of in DeFi right now, is going to be sort of Bitcoin focused. So, it's hard to build, an on-chain earn product or an off-chain borrow product without Bitcoin kind of at the center of that. So, whatever prediction we give right now, I'm certain we'll be sitting at the end of 2026 saying that we sort of undershot that by quite a bit.
Hopefully that's the case, and hopefully we're a key part of bringing more of that Bitcoin on chain. Those were very long questions to the quickfire round. I trust that Matt, Marshall, and Olivia will be more snappy as I ask this provocative question about BitVM and whether 2026 is the year for BitVM, and if not, why?
No, but it might be 2028. BitVM is really interesting, right? Theoretically, there's some concrete research behind it, but we have a lot of teams working on different like productionized forks of a highly complex code base. which is still being audited, and I would place money on there being a vulnerability somewhere in there. But it is interesting. It's something we follow. We talk to all the teams. We do research in this space. So excited to see where it leads. Is the flip side, but I think we're a bit too early. Short and sweet. Here we go. Olivia.
Yep, I agree. I think there's a huge gap between the white papers, the research, and what's production ready, and an even bigger gap between production readiness and being institutional grade. So like BitVM's trying to remove trust entirely. I think we're making a bet that's on trust that's more explicit, regulated, enforceable, and I think that's the same thing that we're going to see with what institutions are betting on.
Thank you. I knew I could trust you guys to give short, snappy answers. Dono, in the same theme, here's a hot take, that the general purpose chain is dead. Do you agree or disagree? And if you disagree, what replaces it?
That's a tough one. I mean, I think it's generally dead. At the same time, you look at a few chains that are very much focused on like privacy. And I wonder if 2026 is a year where one or two of these, actually probably just one, if any, kind of has their moment to shine. I think obviously privacy is top of mind for everyone broadly, but particularly institutions who, at the end of the day, don't want to have blockchain is great in terms of everything being public and auditable, but no institution is going to want to have their competitors or others on the market see where they're moving money to and from. So maybe I think privacy focused chains will have the only bet as far as the purpose built chain narrative goes. And so broadly, I do think it's dead, but I think privacy is one maybe to just keep an eye out for as it relates to 2026. And there are a few really legit teams working on this, but then you kind of go into the bucket of, is this highly private permissioned, or how do you enable that in a permissionless way while still maintaining the key components of privacy? So generally dead, but maybe one winner focused on privacy in 2026.
Nice, thank you. And Jacob, you shared this hot take, which so just interested to get your opinion on whether you think that the general purpose chains are dead and what replaces them, if so.
Yeah, I think every general purpose chain has basically realized that they're losing mindshare to ETH and Solana, and if you're not building for some specific user base or with some sort of competitive advantage, you will fall out of style. Exactly the same point I think Matt was making earlier on you are either the preferred solution or you are trying to play this game of credible neutrality that just doesn't work in the business world. And I think just as we were talking earlier, we used to be building for crypto natives. Now we're building basically B2B infrastructure that's going to sit on the back end behind the scenes. Nobody's going to know about it. People are going to be very opinionated. So if you as a crypto protocol, DeFi protocol, chain, whatever, are not opinionated, good luck.
Nice parting words there. Okay, cool. Maxim, in your opinion, will DeFi tokens outperform tokens from L1s in 2026? Yes or no?
Well, yes. Well, the tendency is, big money is coming into the market, and the valuation methodologies that they're using is very fundamental based, right? I don't think there is a single chain, general purpose chain right now in like top 10, top 20 by revenue in our space. Maybe apart from Tron, which honestly, Tron is probably the highest volume chain ever to exist, and like that result is hardly replicatable at this point. So whatever is the a reasonable multiple to be applied to a new financial products, maybe it's 10, maybe it's 15x of the earnings. There is no way that that blockchains are like actually like the majority of the blockchains can be in top 100 of the market cap. Does this potentially mean that everyone should actually reevaluate and go to much more conservative valuations, maybe. But generally speaking, obviously, top tier teams, top tier projects, and DeFi projects, DAXs, lending markets, perp DAXs, generating tens of millions of dollars every month. They are supposed to be on top for sure.
Of course, that is not financial advice, everyone.
But we're talking relatively, right? Maybe this means everything goes to zero and they're just a little bit, they're worth a little bit more money.
Thank you. Olivia, Matt. Actually, Olivia and Jacob, what's your hot take? What's the most overhyped narrative going into 2026?
I'm just going to say prediction markets. I feel like everyone's going to hate me on this, but I don't know. Obviously, Polymarket had a great run this year. I think the question might be more like, is it sustainable? I think they need two things to work at scale. It's liquidity and information. Both of those are a bit thin. Information, especially, I'm curious about how the thesis of AI agents creating these markets is going to pan out.
I think Olivia is just biased. She lost too much money on Polymarket.
Maxine, we don't talk about that.
Okay, I got another hot one. I was just looking back to see what my hot takes were. Wow, I honestly wasn't expecting Olivia to come out with that hot of a take. Prediction markets are like everybody's talking about. I've never actually heard like the counterpoint on prediction markets. So I kind of agree with it though. It's a good take. Okay, the other one I was thinking was privacy as a narrative is becoming so hot, and ideologically I am 1000x long privacy. Maybe not with my portfolio, but I need to be. I should be. However, just having like watched privacy become like a hot trend. I mean, this happened in like 2021 and it happened again in like 2024, and now it's sort of coming back. I think that people are like underappreciating the challenge of building privacy apps. Like for privacy to become widely adopted, you need a lot of infrastructure has to build up. So I think privacy as a narrative is going to become really hot in 2026 if it's not already, if it isn't already. But I don't think you're actually going to see like privacy adoption occur until like next cycle. So I think one of the things I think is privacy is going to become really overbought in 2026.
And who wants to tell me what's criminally underhyped?
Bitcoin.
Always no one's talking about that. Awesome. We are running over on time, but we should spend some time sharing what we're going to be up to in 2026. So there's 4 things on here. Ultimately, there's loads of stuff that we're working on, but distilled down into 4 items here. In 2026, we plan to enhance LBTC yield. We also plan to distribute BTC.B, as we were just talking about there, to more chains, protocols, and applications. We're excited in January to launch a Bitcoin Earn product, which is very exciting, allowing people to access a pretty solid yield as a set and forget solution. We'll bring that to market in January time. And we also plan to onboard institutional BTC via a new collateral product. We can't share much about that, but if anyone would like to share more deets on any of the items here, then please do chime in now, especially if maybe you just focus on the one that you're most excited about, and open floor. Who's going to go first?
I'll chime in. I think actually one of the things I'm excited by isn't explicitly written here, but it's the second version of Lombard's SDK. When we are integrating Lombard's infrastructure into a lot of the leading wallets, we've seen tremendous demand and tremendous success for improving the user experience of being able to utilize Bitcoin in the open economy, in DeFi. And that underpins a lot of what we do here. It means we can make new products such as Bitcoin Earn available not just via our own app, but via all of our partners as well. So that's what I'm most excited to kickstart the year with.
Yeah, maybe before my connection goes out for the third time, dealing with a snowstorm here. I guess that is the issue. But I'm most excited about the last bucket here in terms of onboarding institutional Bitcoin and via a new collateral product. I think the main, obviously we can't share too much here, but the main point is a lot of issues that customers or LPs have is losing title to their Bitcoin or having to move it out of the custody account that they've been using for 5, arguably 10 years. And obviously to access this on-chain Bitcoin world, and you want to leverage WBTC or CBBTC, that underlying Bitcoin needs to move into one of those custodians. I think for us, what we're trying to tackle is, how do you enable these different wallet infra service providers or qualified custodians to offer their clients these different either yield products or Bitcoin secured borrowing product within the same instance and custody account that they've always used. So I think, again, it ties into, I don't think the 2026 theme will be around, Bitcoin L2s or anything around, BitVM. It's going to be more around programmable custody, and whoever solves that problem where, customers, LPs can maintain their Bitcoin in whatever custody account that they use and still offer, very cheap borrow rates on the DeFi side is going to be in quite a good position. And of course, where we're spending a lot of time on.
Awesome. Anyone else want to share anything that you're excited about, whether it's on this screen or otherwise?
Well, on my side, obviously, both yield and LBTC underlying yield and Bitcoin Earn products, all different flavors of that. They are super exciting, and we've spent the past maybe an entire year, honestly, on figuring out the yield sources, and it's not trivial at all. As I mentioned before, Bitcoin is in its own niche where people are either extremely risk averse to even do anything about it, or when they're ready to touch their Bitcoin and put it in DeFi, the risk premium is still quite significant. So we did spend a lot of time talking to many teams, figuring out the potential yield sources, and it's super early. Next year we'll start implementing them slowly, introducing them both for the LBTC underlying as well as different optional yield sources that you would be able to redeploy your LBTC or BTCB into. So yeah, improving yield is definitely very important here as well.
Indeed. Thank you, Maxim. And Jacob, just to wrap today's session up, to throw it to you, interested in you sharing your opinion on what success looks like for you in relation to Lombard by the end of 2026. What if we're doing this again in 1 year's time and you're looking back, what do you hope to see as it relates to Lombard?
Sorry. I hope to see some big wins. Like 2024 was incredibly explosive for Lombard. 2025 was all about sort of building the foundation and infrastructure for on-chain Bitcoin in the DeFi mullet playbook. And 2026 is where we take all of the, the entire stack of Bitcoin infrastructure we've built to market with some of the biggest players on the planet. So I hope we're sort of, this slide is just basically flashing logos of all the partners we have, we're working with and are building on top of our infra. From the beginning, Lombard's sort of MO has been building the right products at the right time. And I think a lot of the things that are hyped in market may not come to fruition, but everything that we have set forth in market is like built to be ready for the here and now for the people who are ready to, build with on-chain Bitcoin in the moment. And a ton of BTCs coming on chain in 2026. I think we know this for sure. We know the types of partners that these are going to be. And I think it's going to be an exciting one. Mr. Donovan's going to have his work cut out for him.
Just need stable internet and I'm good.
We'll get you some Wi-Fi next year.
Appreciate it.
And maybe we can put a bet on where Lombard will be on a prediction market. Who knows if they'll still be around, Olivia, this time next year. All right. I think that's it for today. Thank you, everyone, for joining us for over an hour as we recapped 2025 and shared some insight as to what we'll be up to in 2026. Of course, we appreciate our community and we appreciate your time and attention so close to Christmas, and wish you all a very good, happy, healthy holidays and prosperous new year into 2026, and hope we will see you then. So yeah, thank you very much for your time today and enjoy the break if you're taking one. So
Thanks, everyone. Thanks for
Merry
driving.
Christmas. Thank you.
Happy
of
holidays.
course, Merry Christmas.
Merry Christmas.